Hello, financial investors, and welcome to the channel. My name is Brent, and today we are going to be doing our Stock Monday buys here on the 24th of February 2020. We're going to currently go over stock futures, which is looking negative for Monday. I think that's a good buying opportunity for me and other investors. We enjoy those days. And then we're going to go ahead and jump into the three stocks I'm planning to buy or going to be buying here on the 24th of February 2020. We will be looking at the dividend information for the company, how much they pay out, what's their payout ratio. We're going to go ahead and look at their earnings as well, and then we'll go ahead and jump in and look at their chart information. Where are they currently trading over the past year? Has their revenue, their income, free cash flow been increasing, or have there been decreasing? And we'll kind of look at that for this video. So if you are brand new to the channel, have not yet subscribed to the channel, I would really appreciate if you do hit that subscribe button below. If you do enjoy this video, find it helpful, entertaining, give this video a thumbs up. And right now, go down below, drop me a comment, say hello, let me know what you are doing for current times in the market. Are you heavily invested? Are you all invested in single stocks? Are you invested in ETFs? Are you doing a mixture? How have you kind of positioned yourself in recent times? Are you in any bonds? I would really appreciate to see the feedback the viewers, subscribers have, and let's start a conversation. I also have a Discord that I'm kind of getting popped up, so I will be posting links in the description below of the Discord channel if anybody wants to kind of pop in there, say hello, have some chats, and let's go ahead and get this video kicked off. So stock futures right now, negative. Monday, I'm expecting to be hit pretty hard. That's going to be a continuation from Thursday, Friday. Coronavirus is out there wreaking havoc again. We've already seen this kind of play out in the headlines, but here it is, back again, double time. So we have the S&P 500 stock futures. Let's go ahead and hit refresh. Okay, so stock futures down 2.08%. In my Sunday video, I released a video Sunday night really late going over the past week performance, but the stock futures were down in around the 1.4s, 1.5s. It's definitely picking up. So the S&P 500 down 2.08, the Nasdaq down 2.58%, and the Dow Jones down 1.98%. Now, to me, I like this. I like to see the market kind of cooling off. I know there's a lot of stuff out there that's a little bit risky. We have inverted yield curve. Our short-term bonds are higher than our long-term bonds. We have a lot of debt getting pumped into the market. Fed is just buying that debt, pumping up the dollar. We have gold and silver beginning to kind of show, not the dollar itself is high as well. It's almost at 100, which is, I haven't seen that in quite a while in the last 5 or so years. We also have gold hitting all-time highs, recently, almost day after day. It's at a 5-year high now. Silver is, I believe, maybe at an all-time high over the past few years, but it's not as high as it has been in the past 5 years. So there's a lot of signs out there just worrying investors. Then we have the coronavirus here. And there's a couple other pieces out in the market that's just kind of negative, and it's affecting a lot of investors. But overall, I think that's good, because those red days are just more buying opportunities. I'm not going to stop investing, especially when you have a cap of $6,000 per year that you can invest in a Roth IRA. You can't just stop investing in 1 year and not touch it, because you have to work. It's a long-term goal. What's happening right now in 10, 15, I'm 34. I'm not going to stop and retire at 60 and just pull all my capital out. My Roth IRA is going to continue to be invested and reinvested into. I may pull capital out of it, but anything that I don't use will just be reinvested. And say I live to be 80 or 90, that's another 20, 30 years after I've retired at 60 that I'm going to still be having that account active, possibly reinvesting dividends that I don't actively need for my lifestyle or my health care or whatever. And when I do croak past the bucket, the Roth IRA is able to be 100% tax-free, passed on to my children. So whether I'm investing right now for myself, or the better outlook is that I'm investing for my kids' future, I'm not going to stop investing right now because of some little volatility that we already saw how the S&P 500 and other indexes play out over time. This day, this week, this month, this year will just be a blip in the long-term outlook. So A little bit of a craziness there. But let's go ahead and cover the three stocks that I'm planning to buy this Monday. So, number one, we have Genuine Parts, ticker symbol GPC. This is an auto parts wholesaler. So, this one currently has a dividend yield of around 3.28%, annualized payout of $3.16. Payout ratio is not showing up currently and has grown and paid out dividends for the past 63 years. So we can actually do some math here. We can take the quarterly payout, the yearly payout, it's an annualized payout paid quarterly of $3.16. We can divide that by their earnings per share here of 584, and we can get a rough estimate of what their payout ratio is. So this one pays out roughly 54% of their earnings to their shareholders. This is actually a very good number. 54%, that's really nice. It's only half their earnings. That means that the rest of their earnings is 50% nearly is being reinvested back into their company in order for them to continue to grow and provide profits and just, do what they do, business. So it's an auto parts wholesaler. They sell a lot of car parts and such. This one is going ex-dividend on the 5th. I am targeting companies that are going ex-dividend in March, which is next week. This 24th through the 28th is our very last week here in February. There's not many companies that are going ex-dividend, none that I hold in my portfolio, so I'm planning my buys for next week. The 5th of March is next Thursday, so that gives me this Monday and next Monday to potentially buy into Genuine Parts. Now, not just Genuine Parts will be affected like this. Any company that is negative in my portfolio, I buy now. It lowers my unit cost, it increases my yield on cost, and it increases my dividend capital and dividend income going forward week after week, month after month, year after year. So that is why I'm doing these and just buying these single stocks. I do have other accounts that have ETFs or what are they called? Mutual funds, like my Roth 401k. That I cannot buy ETFs or single stocks. It's all mutual funds. I have other IRAs which hold ETFs, other accounts which hold ETFs. I think this one is just it's a single stock account, and I just enjoy doing some of the going over the information in it and being invested in it. So this company, along with the other companies, goes ex-dividend every 3, 6, 9, and 12 months. So every March, June, September, and December. And they pay out every January, April, July, and October. The 1, 4, 7, and 10. So if you're looking for a company that pays you out every January or April or July or October, you could potentially buy GPC or look into it. I'm not telling anybody what to buy, so let's make that clear. So let's go ahead and cover earnings. So Genuine Parts reported quarter earnings back in December. They reported earnings of $1.35 per share and revenue of $4.7 billion. They had expected a 1.3, $1.31 per share, so they actually beat expectations, and they were expected at $4.7 billion of revenue, which they met. So overall, their revenue did increase just slightly. It doesn't actually show here. The 4.7 is 4.7, but there's also a little bit of an increase there. So their revenue had increased by roughly 2.2% year over year. And the company said that it expects in 2020 earnings of $5.80 to $5.90. So if we looked at that, we'll say the median there is $5.85. If we go back over here, that's pretty correct. Their earnings per share, $5.84. I would say that's correct. So our payout ratio was pretty accurate of 54.10%. So that is Genuine Parts here. We can see here as far as the results, their earnings, they beat it by 4.7%. Their revenue, they beat it by about 0.3% in the quarter. And they have revenue growth of about 2.2% for Genuine Parts. Now, the second company I am planning to buy is UGI. This is a diversified utility. I like to get into utilities currently. We can see here on Friday. Guess what was positive on Friday? Utilities. Lots of utilities were positive. Not mine, Southern Company and Consolidated Edison, but there were a lot of other ones. So we have UGI, current dividend yield of 3.17%. They pay out $1.30 per year. If you divide that by 4, you'll get your quarterly paid out dividend. And their payout ratio is not, again, showing up on this for whatever reason. So we can take their current payout ratio of $1.30, divide that by 2.69%, which is roughly their current payout earnings per share, we can see that their payout ratio is roughly 48%. So this is actually below. They're only paying out less than half of their earnings to their shareholders, and they've grown and paid out dividends for the past 34 years. So a lot of history here, just continuing to growing and paying out dividends. So I really like to be invested in utility companies, especially right now. I think they will kind of play out, help the portfolio be a little bit less volatile in these times. And then current ex-dividend is going on the 13th. So if you're looking for a company to buy that's going ex-dividend, that's not next week, but it's the week after on a Friday. So you have up until the 13th, up until the 12th of March to buy and hold this company, and then it would go ex-dividend on the 13th of March without the ex-dividend. And you just kind of capture that. You'd have to buy the day prior in order for it to pay out those dividends in the future. And they also go ex-dividend every 3, 6, 9, and 12th month, and they pay out in the same 1, 4, 7, and 10 months. So we've already kind of discussed that, and that's going to be the same across the three companies because they all go ex-dividend here in March. So let's go ahead and jump into their earnings. So this is Earnings Whisper. UGI reported first quarter December 2019 earnings of $1.17 per share on revenue of $2 billion. That is a good number there. Consensus estimate, they were expected of $1.02. They came in at $1.17, and they had revenue of 2.1. Oh, they were expected to have revenue of 2.1 billion. So revenue was down. It fell roughly 8.8% compared to the same quarter a year ago. But we'll go ahead and cover a little bit of information in this article to kind of show you why their revenue actually dropped off a little bit. And that kind of made sense to me. Here in Oregon, it was a much warmer winter. There was very little snow here, very little days where, we were just kind of cold and chilly. So it's definitely a warmer winter. So overall, we can see earnings was up 14.7% year. I think this may have been quarter over quarter. Yeah, for the quarter. So their earnings were up 14.7% earnings, but their revenue was off by 4.9%, and for the year it was down 8.8%. Now they kind of did a good little. I was kind of reading through here, and the reason for this was that they had just a warmer. Let's see if I can just do a warm. Okay. So, UGI Utilities core market volume decreased 1.5% due to the weather that was 3.7% warmer than the prior year period. So, all of this information is kind of showing that because that the weather was warmer, they got a lot of their business because people pay for gas for their heating their homes. If they're not having to heat their homes, pump it to 70, 74. Say it's already pretty warm outside. It's already 7 degrees. You're not going to be pumping your house to 70 or 74 because it's already acclimated where you want it. It's going to be less heating, which is going to cost you less as an individual, which is going to be less revenue and income for the company. So that was their whole reason for being just slightly off on the revenue for the year. So that kind of made sense for me. There's a lot of information on these websites as far as what was kind of provided. They did go down slightly in revenue. They went from 820. I think this is was it in billions, right? Revenue, yeah, billions. So they went from, this is the quarter, and they have their yearly down this way. I don't want to take up too much time, so we'll kind of continue. But overall, they had good earnings growth, but their revenue dipped, and that was just due to a warmer summer. Less individuals had to heat their homes to increase their charging bill, so this company just kind of brought in less because of that. Waysco Group is my number 3 stock that I'm planning to buy. Ticker symbol WEYS. This is textile apparel, footwear, and accessories. This one currently has a dividend yield of 4.16%, one of the highest of these three that I'm planning on buying. They do have an annualized payout of 96 cents per share, paid quarterly, and their payout ratio, this is all incorrect here as far as their payout ratio. We'll kind of cover their earnings here in just a second. And they've had dividend growth for the past 38 years. So here we can see their earnings per share. Let's go ahead and slide down. This is for the quarter. They made 66 cents for the quarter. If we go down here, we'll actually see their earnings. which was here. 2019, 9-month ends. Okay, so that's not the full year. 9 months. So let's go ahead and go 0.96. 0.96 divided by 1.21, multiply that by 100. This is showing 80% for their payout ratio, but this is showing here at the top that this is a 9-month span. So 80% of their earnings were paid out, but they're still missing a quarter of information from that chart. So with that said, let's go ahead and dive into some of their shorter term, just looking at where they are currently at as far as the 1 year. Are they trading pretty high? Are they trading pretty low? Genuine Parts trading currently below 200-day, 50-day moving average with a starting yield of 3.17%. Right now, I do think Genuine Parts is a good buying opportunity for myself to begin kind of buying it slowly, averaging into it. I do think over the in the upcoming future, we should see Genuine Parts continue to move higher. We can see here it's been kind of stagnant as of 2015, just moving, trending to the side. But if we bring in their earnings here, let's go ahead and bring in their earnings per share. Earnings per share over the past 5 or so years. So 2015, price just kind of stagnated and went to the right. Right here, we can see their earnings per share just kind of stagnated, went to the right. There was a dip here in the earnings per share, the dip here in the price, but they picked it up. They're now at some new all-time highs as far as earnings, and they've been keeping it here in time in the last few quarters that they've been reported. But their price haven't adjusted to kind of showcase that their earnings per share went from just this being the sort of the trend and their price just being the sort of the trend. Well, their earnings per share shot up, but their price just hasn't accumulated for that difference there. Next, we have UGI Corporation. This one here, price is down at the bottom at $41.28, putting it below 50-day and 200-day moving average. They currently have a starting yield of 2.93%, and they had some lowering earnings per share. We can see the earnings per share bar kind of moving lower, and their price was also kind of following the earnings per share. Here recently, they announced a higher earnings per share. This could be, we want to see a trend line here in the future, but I think this is a good buying opportunity for myself. I do see some recovery here of the earnings per share potentially moving higher. If we look at this over the past 10 years, we can see that the reason for the big drop off in price, just because their earnings, look at this earnings, they just took a dive, just boom, lost it. They did hit a bottoming out point. This is where I'm kind of buying into it. I do see a buying opportunity for myself. Their earnings per share had fallen by so much, their price had also fallen by so much that, let's see here, kind of just looking at the history here, when the earnings per share was about here, we could possibly see them falling into the 30s, but we are seeing some recovery in their earnings per share. So we may see that this company looks to me like it could be going to buy an opportunity again. I'm not telling anybody to invest in these companies. These are just what I'm looking at, why I am investing in these 3 companies. I see potential in them. They've been beat up in the short term, but I see potential in the future of them recovering, and what they are going through right now is just a little blip. They'll recover, and I'll make my profits and also lock in a very nice yield that will move higher into some new highs. And then we have Waco Group here in the short term, trading at $22.86, below 50-day and 200-day moving average, and a starting yield of 4.16%. We can see the earnings per share is moving higher. Over the past 10 years, what took place? Well, they got beat up here. Even though their earnings per share, check out their earnings per share, they did have a little bit of earnings per share drop here, but recent times they've been moving higher, 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 but their share price has just not been the same. Investor and sentiment is just that retail is dying, but in reality this company is continuing to drive higher profits. Their earnings per share is moving higher to new all-time highs as far as earning potential, but their price has not quite showed it yet. So I think this is just kind of a good opportunity for myself to just buy more shares. And as investors, we'll look at this company and say, hey, you know what is the reason for this one trading so low? Their earnings per share is moving higher. We'll check out their revenue and such in just a second, but eventually I think we'll have a sharp snapback. We'll move from, say, $22 per share to back into the 30s or even 40s in the future. So let's go ahead and we'll look at these 3 companies as far as their revenue, net income, and free cash flow. So here we have genuine parts. Let's go ahead and put percentages in there. We can just kind of see the trend lines here. So revenue up 8.9% on average per year. Net income up 5.1% on average per year. All positive there for the revenue and net income. Free cash flow, it's a sales driven company, so their free cash flow can go up and down pretty wild. UGI Corporation, this is a utility company, pretty steady. Revenue is probably one of their most steady things. They just have customers. They don't get a lot of customers that move. They don't get a lot of customers that kind of leave their services. They're kind of a monopoly in a way. So they're just steady increase, about 2.8% on average per year. Net income, 6.7% on average per year. And free cash flow up 8.1% on average per year over the past 10 years. Also, I wanted to kind of bring in their earnings. Let's go ahead and look at their earnings per share. Where is it? There. Okay. Let's go back to genuine parts. Earnings per share is in the green. So here's that little hit. Let's go ahead and bring their price in here as well. Here's that little hit. Purple is their earnings per share. They had a little bit of a hit here. Overall, they've been kind of trending sideways with their price. Just continue to move sideways from 2015. Their earnings was pretty much going stagnant for quite a while, but recently they kind of picked it up. Their price hasn't adjusted, but their revenue, net income, and free cash flow is just kind of moving as well. UGI, we look at this company, their price here had been hitting some $30, I think is what I remember kind of seeing. This is all percentages, so I don't know it off the top of my head, but they did have a high here. We can see earnings per share was here at peaked. Their earnings per share degraded, fell to low. Their company fell too low. It hasn't picked up, but their earnings per share has slightly picked up. I think investors want to see how this one kind of plays out in the future. Can they continue to kind of add on to this, move to highs and such, and then it will probably see some recovery in that price. But for the currently, kind of a speculation buy, and we've seen their revenue, net income, free cash flow all positive there. Waco Group, again, we've seen this kind of stock kind of fall. Now their price has fallen. Here in the short term, they fell from highs down to now lows, but look at their earnings. Their earnings, the reason investors kind of lost probably confidence here in the past is their earnings kind of stagnated, but they've been picking it up, and now up, but their price just hasn't shown that. And let's go ahead and drop their price. And now we can kind of see their revenue in the blue up 3.4% on average per year. And the orange is their net income, 5.2% on average per year. And their free cash flow, it's a sales driven company. They have some pretty wild free cash flow, so down there a little bit. But overall, I can see that their earnings is just moving steady. It's at a steady up about 8.8% on average per year over the past 10 years. And I think that's pretty good for Waco Group. So that is pretty much it. And all I wanted to kind of cover in today's video. I think tomorrow will kind of be an interesting day here. We can see a nice jump there. NASDAQ almost down at 3%. S&P almost at 2.25. And the Dow Jones at 2.07. So those are the three stocks I'm planning to buy this Monday. Genuine Parts, ticker symbol GPC. UGI, the UGI Corporation. Where to go? UGI Corp. And we have Waco, ticker symbol WEYS. So those are the three stocks I'm planning to buy. Let me know in the comment section below. Are you planning on buying anything this week? Now that you've kind of seen stock futures, you can see that we're going to be red this, on Monday. How do you think the rest of the week is going to play out? Do you think we're going to have a snapback by the end of the week? Or do you think the market will maybe lose 2 to 4%? Let me know in the comment section below. I already have what's in my mind. Let me know what's in yours. Thank you all for tuning in. If you haven't subscribed yet, definitely hit that subscribe button below. Give this video a thumbs up right now. Go smash it if you haven't smashed it below. And drop me a comment. I will see you guys next time. Have a great day. Bye.